Hello and thanks for joining me. It is Sunday, November the 13th, just after the 6 p.m. open, and you're looking at a 4-panel layout. On the left column is the ES on the 65-minute chart. Down below that is the same on the 15-minute chart. Right-hand column, SPY, daily, and below that is the QQQ daily. So I just wanted to make some updates on my chart, talk a little bit about what happened after an incredible week last week, and I'm going to go ahead and start with the SPY. Something I want to point out here are the weekly highs and lows are from the week prior to last week. I will update those for this past week after I do this video. And main purpose of sharing this information is just to let you know that I continued this range from the low that started on October the 13th, and I extended it to the high that was made on Friday. So that puts a swing low right at this level, which was the weekly low from the week of October the 31st, and it'll put half back for the SPY right around 373.22. The support and resistance level where SPY had failed and formed that swing high, which was the weekly high on the week of October the 31st, was just obliterated, blasted right through that on Thursday, and on Friday price extended into a fair value gap on the daily. For the Qs, the support and resistance level, the one that I just referred to on SPY, we haven't reached that yet, and we traded through a weekly fair value gap Thursday and Friday. I also want to mention that I keep moving averages on the daily chart. This solid gold line, that is the 50-day moving average, and the green dashed line is the 32 exponential. Switching to the ES, the blue lines are 4-hour fair value gaps. One of the things that I like about Friday's price action is that we traded up, back down, and then back up through this fair value gap. So I'll take that off the chart after I'm finished with this video. This lower 4-hour chart, I'm going to go ahead and zoom in. This lower 4-hour gap, I'm not so sure about removing from my chart. If you look back just a few days, this wick did move price into that gap, but not a lot of business was done there. And then Thursday's big move up, it traded right through it again. This is a beautiful break and base. ICT students may refer to this as a bullish order block, but in any event, this is on a longer term chart, 65 minutes. A setup like this was just a great indication of the bullish continuation Thursday afternoon that ultimately resulted in a higher high on Friday. Half back of this range is 37.55.75. So there you have it. Something that I find helpful from doing this type of analysis is it helps me keep the big picture in mind. Looking forward, levels that I'd be keeping an eye on are this 4-hour gap that I mentioned earlier. I'm not going to remove that from my chart. A retracement and a bullish move away from the top of that gap would be indication to me of a bullish continuation of the trend. Another possible scenario is that we trade down and trade through this level. If we break out of the bottom, I would be looking for bearish trades, as I'd expect price to go back and explore some of the range that resulted from the CPI release Thursday morning. So thanks so much for your time and attention, and good luck with trading.